Glenn Gruber. How's it going?
Good. Can you hear me all right?
You got a baby sleeping or something?
No. Just want to make sure it was working.
Oh, okay. Are you not feeling well? You sound different. Is it?
I'm a little dry. I mean, maybe that's all it is.
Roman sounds like the ultimate authority. Oh, here he is.
The ultimate authority. My goodness.
You like that?
I like it.
That's good. I'm glad I could bring you on with that. That'll work. The ultimate
authority on what, however?
Are you on a cell phone?
I am.
Okay.
Am I sounding okay?
Oh, that's better. Whatever you did.
Okay.
Roman, this is Steve, and Glenn is on as well, Glenn Gruber.
Hey, what's up, Roman?
Thank you so much for doing this. We really appreciate it. And,
thank you for having me.
And I guess we'll just jump right into it. Welcome to Device Squad, everybody, the podcast for the mobile enterprise from Propelics and Anexinet company. Device Squad, fighting crimes against enterprise mobility worldwide. Bad UI, frustrating user experiences, poorly conceived mobile strategies, we defeat them all. This podcast series will cover all aspects of enterprise mobility, including strategy, development, design, testing, and more. My name is Steve Brickman. I'm a mobile strategist and UX architect with Propelics. First, a brief history of the company. Founded in 2011, Propelics is a mobile strategy consultancy helping enterprises worldwide devise true mobile strategies and develop world-class mobile applications across all industry verticals. Propelics clients include large companies like Amway, Bright Horizons, Bank of Montreal, Dubai Airports, Family Dollar, DLL, Cintas, Merck, and many more. Propelics' menu of services includes 8 different mobile kickstarts, covering everything from mobile strategy and road mapping to MCOE to UI UX design to mobile testing strategy, along with soup to nuts app design development and support. Additionally, Propelics offers 3 homegrown enterprise mobile products. Today, I'm very excited that we have Roman Dumiak here. Roman is the Director of Technology Innovation at Allstate Insurance.
Thank you for having me today.
Thank you for joining us. We also have Glenn Gruber, a Senior Mobile Strategist with Propelics, and he will be asking all of the smart questions, and I will be asking the rest. So the first thing I'd like to talk about is the fact that you've been with Allstate for 42 years.
41 years, 51 weeks.
What is that like, staying with a company for that long?
I think it's amazing. But I will be honest with you and tell you that even before I was with Allstate, I was actually the kind of guy who thought he wouldn't last with a company longer than 3, maybe 4 years. And in fact, I worked for several companies before I actually found Allstate. And I think I found a great home.
That's funny that you say that. Before Allstate, with 42 years in, like I was going to say, that must have been high school for you.
Yeah. I mean, you sound pretty young and sprightly. So, you got that going for you.
All right. Well, emerging technologies will do that for you. I think it keeps you young. I really do.
Because you have to just keep
learning.
Yeah. Keeps your brain healthy.
In college, I was a teaching assistant in the computer science lab. And then from there, I worked part-time as a computer operator for a heat treating manufacturer in the Chicagoland area. And then I moved on to, I worked a very short stint for IBM. And I also worked about a year for the state of Kentucky.
So you're obviously the perfect person to talk about how technology has evolved in the insurance industry. So what was it like being a senior IT architect at Allstate in 1976?
Well, I didn't start that way. And one of the things that's made Allstate exciting is I actually started as a software developer within a group that did reinsurance. And the company was always very good at giving me new opportunities. So I moved on to doing database work. So I was kind of a DBA/infrastructure database guy for a while. I then moved into networking. So I was a networking internal consultant for the company. I also did a lot of middleware both on the mainframe and on client server platforms, WebSphere specifically, and then moved on into architecture. And then from there, I spent a good portion of my career in architecture. And then one of the things we did is kind of redefined what we wanted to do from an innovation perspective on the technology side within IT. And I was fortunate enough to lead that group and grow that for the last 6.5+ years.
So sort of just as mobile was coming into its own.
Mm-hmm.
You know, it's funny. I used to be with a company called Aperion, and we did some strategy work for Progressive back in like 2009. And at that time, we discussed the possibility of building an app that would keep track of a user's speed as they were driving, and it would, potentially use that data to adjust their rates. And that was like really early on. And I think I just threw that out there as a possibility, not even really thinking that it would come to fruition. And now it seems fairly common. You guys have an app called DriveWise that Forbes said that the results were that drivers are actually safer behind the wheel than the company had thought, and that 60% of users actually wind up paying less for their insurance as a result.
That's right. So DriveWise is a mobile app that can be used by both Allstate Insurance folks and even non-Allstate Insurance folks. And the objective is to really help make you a better driver. That's really what the app's objective is. Now, if you are a Allstate customer, we are moving towards being able to do usage-based insurance. So the idea of using the app is not only to make you a better driver, but if you are a better driver, is to start offering you perks, discounts, and maybe even suggestions on things that can help make you a better driver.
So, Roman, I'm a person who driving in New York and now in the Boston area.
You're a terrible driver. Is that what you're getting?
No. I'm a very good driver.
I'm a terrible driver.
And not in the Dustin Hoffman Rain Man way. I'm a very good driver. But I also happen to be a very fast driver. So 2 questions come to mind when I hear this. One, because I've been afraid of these types of technologies because I'm worried I'm going to be one of the 40% of people who see their rates go up. So kind of like, what's the definition of a better driver that you guys use that must be part of the algorithms that decide what your insurance rates could be? I mean, maybe we can kind of start there. And then if you could also just layer into that conversation, how do you compensate for where people live, in that regard? And because again, I'm not even sure how you define that or how you use the data from the device that you put into the car to get all the information from the car to drive the rates.
Okay, so let me give you a short answer and maybe a longer answer, which will help put it in context. So the shorter answer is DriveWise and several other software products from other companies basically act the same way. They're using a dongle that you can put in the car or a cell phone app with the various sensors in the cell phone to be able to really figure out certain things like what your speed is via the accelerometer, how fast you're braking, things like how fast you're turning or how hard you're turning, and then a few other factors that people will layer in and out, some of which we're not sure necessarily define better drivers or worse drivers. So as an example, is it a bad thing to brake hard on occasion and still not have an accident, right? Because that shows that you actually didn't have an accident versus somebody who wasn't paying attention and didn't brake at all, right? Did a rear end collision. So we're still working through some of those algorithms through machine learning and eventually deep learning to be able to figure out what we should do. But the idea with Allstate's solution is we will give you a rate for your insurance based on the typical characteristics that you give us, your age, gender, your driving history, the type of car, things like that. And then what we'll do is based on 50 or so trips and then the continued use of the DriveWise app, we'll give you a discount. So the 51st trips help us create a baseline. And then subsequent to that, the application can maybe suggest to you things like you seem to be accelerating. You're doing jackrabbit starts. Maybe you shouldn't do that. In my case, I was trying very hard to be a good driver, and one of the suggestions they made to me was consider not making that left turn across a 4-lane highway kind of road where I exit my home. And they said, for only 2 minutes more, you could make a right turn out of your subdivision and be safer. So it's not just about things like how you drive, but maybe even incenting you to better ways of driving and places to drive through. If there's areas that we know, for example, have high accident rates, maybe we'll route you around that intersection and give you extra points or even some money to do that. That's the short answer. Now, let me give you the longer answer, and that is insurance companies really make a profit in 2 ways. One is they make a profit by investing in the premium dollars you pay them, in the insurance premium. The second way they make a profit is really by preventing claims. And that's what really in auto, the idea is to create better, safer drivers. In home, it's about making your home safer, more secure. And then in the case of life insurance companies, it's things like promoting healthy habits and lifestyles so you live longer. That lowers the claim rate.
All right. I'm still not sure whether or not I should be one of the people to sign up for this.
Here's what you can do. Go ahead and download the app and give it a try. You don't have to be an Allstate customer to actually run the app.
And then if you're just sort of a guest user, does it then say if your rates would have gone up or down?
It does give you a score. It doesn't tell you the rates per se.
Yeah.
But
cool.
But it does score your driving.
How does an app like that determine if the person is actually driving or is the person's just a passenger, say in like an Uber? Or...
Well, in our case, early on, what we did was we allow you to turn the app on and off. So you don't have to run the app continuously when you're driving. So that's an important thing. But you do have to do 50 trips to create that baseline. So we assume, if you're going to turn the app on, that you must be driving. The second thing we are, and I can't talk too much about it because it is a bit proprietary.
Sure.
But there are ways to determine whether or not you are the driver of the car if there's a cell phone app.
Oh, now I'm intrigued.
Well, just think about what you do with the phone when you're in a car, right? You pick it up maybe and I'll give you an example of something we don't do, which is if you're the driver and it's your cell phone, you pick it up and move it to the left side of the car.
And I mean, it's likely that you won't interact with it very much if you're driving.
That's true too.
So that actually brings up an interesting question, because one of the things that I love on my wife's car that I don't have on my car, because my car predates when this was available, is CarPlay. So there are different times where we'll be driving together and maybe we'll put in, my phone or her phone, depending on like kind of who needs to charge, and that sort of drives the CarPlay thing. Kind of 2 questions here. Like one, I guess I would still have to turn on the app to tell you that I'm driving, or if my wife's phone isn't there, like I may not turn it on. With or without CarPlay, does turning on the app do anything to restrict the user's ability to use the smartphone while they're driving? Because we know that distracted driving is a big problem, leads to a lot of accidents. That was part of why things like CarPlay and Android Auto were created, to try and reduce that, but still letting you get value out of the device. So is there anything in DriveWise, or maybe if you know of other competitor apps that do restrict what you can do? And if it doesn't, are you also looking at whether or not, hey, it looks like they're driving, but they're also texting? I would presume something like that would impact someone's score.
It does not right now. However, we are certainly looking at techniques that we could use. Part of what we're doing is collecting lots and lots of data to feed into a machine learning model so that we can actually determine those things by using machine learning rather than trying to figure out what the algorithmic correct answer would be, if you will.
Sure.
So what we do is, again, we do ask you to turn the app on and off. It's not a requirement. We do assume that if you turn it on, you're the driver. We do allow you to say that you're also the passenger, if you are. And we can see the difference in the way driving occurs when it's the driver's phone versus the driver or the person with the phone is a passenger.
Okay.
Oh, I see. That's actually a great idea, Glenn.
I just have one more question. I will download the DriveWise app. I will try it, as the guest user thing. What's like a good score, in terms of whether or not I should adopt this kind of going forward?
Okay. You will see from the app itself, it will give you red, yellow, green.
Okay.
And it has a different set of graphics, and it will be very obvious to you, how you're scoring.
Okay. All right. Good to know. All right. I feel better now.
I just wanted to back up a little bit. If you could give us a definition of underwriting and explain how the IoT plays into that.
So most people think of IoT in terms of things that are going on in the factories or things that are coming out as consumer goods. And they probably don't realize that insurance companies are doing IoT in lots of different ways, depending on what business they're in. So underwriting is just being able to balance the price of an insurance product against the risk. It's really, it has a formal definition around a process of evaluating the risk of an insured home, car, or in an individual in the case of life insurance or health. After determining the risk, the next step is to set a price that establishes the insurance premium that will be charged for specific coverages. Now, this is where the rub comes in with a lot of people, is they want to get insurance at the least possible cost. And one of the ways you do that is you exclude things from coverages. So, you can, for example, most states require that you have liability insurance, but not collision. Liability handles the other car, collision handles your car. So if you saved money on your premium or policy by saying, I'll forgo paying collision, and then you get into an accident, which is your fault, then you may, hopefully you're not surprised that because you didn't pay that premium, you wind up having to pay your own car, not the other guy's car. So that's where a lot of people get very upset with insurance companies. They don't realize what the exclusions are. So in homes, it's things like flooding. That's really handled by United States-based flood insurance, not usually home insurers. There's famous things like a life insurance policy isn't going to pay out, or maybe if you commit suicide, for example. It's determined that your wife gets rid of you and she took out the policy on you. And so let me just add where we're headed in insurance. Originally, it was supported by historical data, and there were people called actuaries, and they had actuarial tables. That turned into computer models and algorithm. And really kind of the second generation of underwriting was really introducing something called credit-based insurance score. It's not exactly your credit rating, but it's how your credit rating speaks to your insurability. That is a pretty big predictor in the insurance industry, especially for auto. And it's not allowed in every state. So insurance is regulated state by state. So states like California go on and off with this as being able to be used. Massachusetts and Hawaii have said, no, you can't use it, and other states have. But the third generation of underwriting will really rely a lot on IoT sensor data. In auto insurance, it'll rely on telematics from either the dongles that I talked about or the cell phone apps like Allstate DriveWise. In homes, they'll rely on some of the smart home devices, whether they're monitoring things like water pressure or fire and smoke detectors, things like that, and burglar alarms, etc. And today, you even if you just say, I have a burglar alarm in the home, you'll get a discount for some of that kind of stuff. The new thing that I think spurred this conversation was in life insurance starting to use personal fitness data, and the John Hancock example that people talked about.
So let me ask you a question, Roman. So on this third generation, based on all the sensor data, the auto seems pretty straightforward. You either have the app or you have the dongle, and luckily all the car companies, for I think decades have had these interfaces to the computer data from the car to be able to drag all that out. So that's fairly straightforward. On the home side, though, is it going to be on the responsibility of the homeowner to buy some of these smart home devices, things like water pressure or or gas pressure and things like that? Like, does that require folks like where I live, like National Grid or someone, the water company to do that installation? Then I have to accede to letting them share that information with you. Like, how is that going to work? Because that seems that there's a lot of different actors that have to participate for that to take off, because having an Amazon Echo doesn't help anybody.
Well, it will if the Amazon Echo is connected to a lot of smart home devices. But let me just go back. Home is probably further out because of exactly what you described, the fact that it's not as controlled, it's more dispersed in terms of who the vendors are and who the different companies are offering different solutions. But one of the things that's been tried, for example, State Farm went into a deal, I believe, with Lowe's and said, if you buy this water pressure detector or water detector, then we will give you a 5% or some percentage discount on your home insurance. Okay. Now, you don't have to do that, right? It's not mandatory. What it is, it's an incentive to say, this will help keep the cost of claims down. So therefore, we will recognize your good behavior, if you will, or your proactive behavior in helping to do that.
So what does that detect? Flood potential or?
So one of the things that is really high on the list, and it's usually like one or two, depending on the insurance company, for things that go wrong in your home, is your washing machine hose goes bad. So if you think about your hose, that is always on, right? And it's really the washing machine that turns on and off. If that hose should rupture, then what you've got is water coming all over your floor in the laundry room or wherever you have your washing machine. And that can cause a lot of damage. And you can detect that through various ways. You can detect it through pressure sensors that say, gee, you're not really home. You don't normally use this kind of pressure at 1 p.m. What's going on? Or you can have things that are plates that are on the floor, and they just detect the water on the floor where it shouldn't be.
Oh, yeah, we need that. We definitely need that in our house.
So now I have a second order question about the smart home stuff. We agree that getting these sensors in place is kind of the first step, and that may take a period of time. And there are these incentives that are put in place maybe by some of the insurers to speed that process up. One of the other challenges in general with IoT is if you're trying to manage a number of different devices, if there's firmware updates or what have you, and even just reading the data off of them, that so many of the mechanisms can be unique to that device. And yes, there are things like HomeKit from Apple that are trying to pull some of that together, but not everybody participates. So for the companies that are trying to push this forward, I mean, I'm not sure if Allstate is doing this at all or not, but what role can an insurer take to try and make that happen? Or do they just hope that it can happen?
Well, it's more than hope. Insurers are really not manufacturers. So some insurers are being proactive and working with partners that they believe are market leaders. And it could be one or two. Let me give you the example of John Hancock, where they're saying, we will attach the Vitality program to through all of our life insurance policies. It's mandatory that you use it, and you have to use either a Fitbit or an Apple Watch, right? So they're not picking a favorite. They're saying, these are the two market leaders. We'll go ahead and use that. Other companies are taking an experimental approach where they'll just pick maybe a startup that they feel has great potential to disrupt the market. And it might be a company that does water pressure sensing in a certain way. And so they invest in those, assuming that they will grow. And there are insurance companies who are really investing in a number of startups. And then the third one is really let's wait and see. And we'll be fast followers when a market leader occurs. So in the case of Nest, for example, is appearing to be a market leader, or other places where you're not seeing a whole lot of competition, although I'm sure Honeywell disagrees in the smart thermostat market, but things like that. So those are your three options from an insurance company perspective. And some of the companies will pick one of those three, others will take two of those three and work with those.
That's really interesting. Is Allstate doing anything around Apple Watch as well to improve the health of its members?
So we've been watching the John Hancock activity. Allstate is also a life insurance company. It's called Allstate Financial, but we are not in the top 20 in the U.S. So we and a few others are taking a look at what the history of the John Hancock effort is and what its adoption is. So I think it's an interesting history with John Hancock. So let me walk you through with what they're doing on the health side. They started in Canada back in 2015. And if you will, the John Hancock subsidiary in Canada that is part of Canada's Manulife holding company partnered with a company called the Vitality Group. And that is a South African holding company. They started experimenting with the idea of promoting an Apple Watch even back in 2016 and 2015 at a low price. So you could buy a $350 at that time Apple Watch for $25 through the John Hancock Vitality program. And so it was, that was an incentive. And then the insurance discounts would come based on you meeting certain exercise or wellness goals over a 2-year period. So you had just in the same way Allstate was doing with cars, there's a set rate. And then if you follow the Vitality program, the wellness program, then you wind up getting money back or a discount. In September, I think it was actually September 19th, they announced that they were going to do this for all of their life insurance products. So they were going to do it in two ways. One was you could go with the basic solution, which was Vitality Go, at no additional cost. You would just get the premium. And if you followed the Vitality program, that way you would earn discounts with Amazon, REI, and some others. But you wouldn't get a premium discount if you just did Vitality Go. Then, if you went forward with the other program called Vitality Plus, you could actually receive up to a 15% discount on your annual premium, as well as a free Fitbit or an Apple Watch for, I think now it's running $25. And then you also get other gift cards for entertainment and things like that. So you have a choice, but regardless, you're going to be part of that Vitality program. And again, this is stuff that's out in the press. I'm not a John Hancock employee or a person that really has the inside of it, but I do know that they have stated in their news releases that there are some benefits to the policyholders. One is they say people are living between 13 and 21 years longer than the rest of the insured population. Now, I'm just not sure there's enough data to back up that claim, and that claim isn't really coming from John Hancock. It's coming from Vitality, which has been around a lot longer and has more data. But I'm still not sure you can say for something that's been around since 2013, I think, that you've got enough data to really prove a longevity of 13 to 21 years. They also state that they generate 30% lower hospital costs than the rest of the insured population. So that's Vitality's perspective on the program. John Hancock says, well, what we've seen in the data is that people will take nearly twice as many steps as an average American. They've logged more than 3 million healthy activities like walking, swimming, and biking. And they engage with the program about 40 times a month. Now, that is kind of in my opinion, is the secret words in that announcement. This isn't so much about, let's see if John Hancock can increase market share, because they are number 5 in the US already. But what it is about is the fact that you can now get higher customer engagement and collect more data while you're doing it on what makes people healthier. So I think this is more of a play around getting the customer engagement, getting more data than it is to actually increase market share.
So, Roman, let me ask you a couple of questions about that. So, first of all, seems like a win-win. If I can live 15 years longer, that's great for me. And, it's also great for the insurer because I'll pay premiums for that much longer. So that's good. And frankly, the discounts at Amazon and REI are probably important because, well, I do love both of those companies, but in order to do all those activities, you probably need to buy a lot of stuff. So that also works well. But, the part about the engagement is interesting. Like in many products and services, engagement is really critical because, like Amazon as an example, like the more I go to shop there, the more money I probably spend, the better their margins are, the better customer lifetime value that they get out of me. However, for an insurance company, like I write a check twice a year. Like, so what does really engagement buy you? This is not obviously technology anymore, but what does engagement buy an insurance company?
That's a great question, Glenn.
I get one a podcast, so that was it.
It buys them loyalty. The more you engage with your company or with an insurance company in a positive manner, the more loyal you are and less likely it is that you will go look or shop for other insurance options.
Well, it's interesting because similar programs have been instituted without the insurance piece. Like at Anexinet, they are running this program to encourage walking, and we're using an app called Walking Spree, and it ties into your Apple Watch data or your Fitbit data. And personally, I've noticed that I've been very engaged with that, and I use it a lot, and I've been walking more as a result. That's just because I want to make sure that I beat Patrick.
Yeah, good luck with that.
In the top 10.
So,
yeah, and part of it honestly is the gamification aspect of it.
Yeah.
Glenn, if you do look at the DriveWise app, you'll see it tries to lure you into making you a safer driver by giving you better bells and whistles on the phone, giving you awards or tokens or badges.
Sure.
We don't need those stinking badges.
And then you actually get monetary incentives too. So the idea is really to promote, in the case of life insurance, to promote healthy lifestyle. In the case of auto, to promote safer driving, right? We're trying to do things before the automated car comes out, right? It's going to be a number of years before the U.S. auto market actually can turn over, even if you started saying automated cars were to start tomorrow. I think the average age of a car on the road today, average, is 7 years.
I think it's more than that.
It's more than that at our house. But so my follow-up question was, well, given that the new Apple Watch now has ECG built in, and other devices I've seen have they'll detect your blood O2 levels and things like that. What are the issues around HIPAA compliance and privacy? What are the implications there?
Oh, there's a lot of them. So let me walk through it. From a concerns perspective, some people really consider it medical surveillance, right? Is kind of the term they use. Hancock says its policyholders' sensitive data would not be sold to a third party, okay? and, gives you the positive aspects of it and stresses that Vitality is a wellness company that they partner with. The data is, saving people money. There are other rewards, things like that. Just so that you're aware of it, other employers that are doing health insurance are also forging ahead with the idea of wellness programs. So it turns out that Allstate has a health insurance program as well for its employees through another provider. And if I get an annual checkup, if you will, where they do blood pressure monitoring, BMI scoring, and then also a blood test, they will give me a $200 discount on my corporate health insurance. Now, if you don't want to do that, you don't have to, but then you'll pay $200 more. And that has nothing to do with IoT per se. That just has to do with we're trying to promote wellness, and in an effort to do that and keep insurance rates down and claims down, we encourage you to take this test. And by the way, if your blood pressure is high, then they tell you about things you can do to improve that.
How much do I get for the prostate exam?
I don't know.
I was just looking for an upside for that exam, but it's, you can delete that out of the podcast, Steve. Anytime.
I'm not deleting that out.
Lastly,
Okay.
people are buying these devices anyway without understanding the risks. So what you wind up with is a few things. You wind up with consumers not understanding, how the data is being used. You wind up with privacy concerns, other ways that the data might be used. There's nothing, for example, in John Hancock's statement that says other companies within the John Hancock umbrella can't use that data for other purposes. So as John Hancock grows and has other subsidiaries, they might use that data. Security is always the issue. Data generally gets stored in a centralized location, so that leads to potential security breaches. There's been a call in the press about fairness of this kind of activity because it could be biased against people who don't have lifestyles that allow them to go to a gym. So if you're a low-income person and you're working multiple jobs, you might try to be as healthy as you can with walking and things like that, but you can't necessarily go to a gym and exercise as much. And then there's always the opt-in versus mandatory. There are places that have tried to make it mandatory. West Virginia, for example, had to scrap a plan that required their state employees to wear fitness trackers because it was mandatory, or they would have to face higher premiums. Going the other direction is not a problem. Here's your premium. Wear this, we'll give you a discount. That's going down versus the mandatory approach that West Virginia took.
So how far do you think this will go? Like, for example, a diabetic with an insulin pump that's, now connected. Do you think that people with diabetes will be rewarded for, being more regular with their insulin or being more responsible, or people with other illnesses will be rewarded for being more responsible with their medication, say like, somebody who's bipolar? There's infinite possibilities.
Right. And we've already probably heard stories. It happens more with Fitbits than it does with Apple Watches, but somebody's having a heart attack or something and the Fitbit detected it. And, people sometimes claim that their lives were saved because they were able to see that on their device rather than just saying, oh, it's gastronomical pain, or something like that. The future is always hard to predict. My take has always been to keep asking questions. Again, I think there are a lot of concerns around privacy of the data, fairness, security, things like that, and just, how the programs are presented to potential customers. But I think in the end, what we'll see is not just the monitoring and collecting of the data, but you'll start to see things happening, at least I hope, that'll be proactive. So think of a pacemaker, for example. Pacemaker is sitting in your body, waiting for you to have an erratic heartbeat so that it can turn on and stabilize your heartbeat, right? That's the kind of things I think these devices can do in the future. So if you are diabetic, maybe it gives you a smaller amount of insulin to help you through that potential diabetic shock you're going through or something like that. So that's what I think is going to be happening in the future.
Yeah, I'm just thinking that the insurance companies would be highly motivated to encourage development of a sensor that would sit in your body somehow and would just sense the levels of these various drugs that you're supposed to be taking for whatever ails you. You know what I mean? I'm just thinking about the generic implications of this kind of technology.
And I do understand that some people feel that it's intrusive. I get that. And I think what we're all going to have to decide at some point is whether the privacy concern you have outweighs the value you get.
It could be huge value to everybody.
Yeah, we've had a really good conversation. Steve, maybe this is where you're going to go anyways. But we've talked about, the potential of IoT and wearables and, like the Apple Watch in the insurance industry. But I want to maybe bring this back, one level to, hey, you're the director of technology innovation. A lot of the people who listen to this podcast are in their IT organizations. What are some of the challenges for someone in your position or similar in trying to bring these new technologies into the organization? Like, AI and machine learning, that's an extension of what many companies are doing with analytics and data science, but yet it's extremely different than what most companies are doing today. And again, like the IoT side and ingesting all that data, what are some of the challenges, and how have you and Allstate kind of approached building up those competencies within the organization to support these directions?
I will give you my perspective. I think a lot of people will ask in general, like, what are Allstate's big bets? Is Allstate betting on big data? Is it betting on IoT? Is it betting on machine learning and deep learning? Is it betting on, you pick it, VR and augmented reality? I would say our big bet has been around looking at all of those and looking at them in a way that we can build competencies so that we can leverage those for our customers and, grow the company, if you will. Some of the technologies that we look at don't always pan out the way we initially thought they would. We knew, for example, early on that drones, for example, and the ability to photograph from the air would be a big game changer in being able to look at catastrophe claims. So, when you have major floods like in Houston and places like that. Originally, we looked at the real drones, the kind that Lockheed Martin makes, the Predator drones and those, because they had high resolution cameras and we would be able to see down and look at where the damage actually was and map that against geocoded data that we already have. It turns out that now we've got aerial drones with the multiple propellers, completely different technology, same idea though. But I will share with you that Allstate and Esurance in the Houston flooding that happened last year, we used regular airplanes with high resolution cameras to fly over the area and be able to figure out what the water levels were, where our customers were, and whether their cars were actually, total losses because the water was up to a certain level on the car or not. So we do that over time. Some of the things we've tried, we've done on multiple iterations. I think we're on our third iteration now of virtual reality. Still looking for kind of a good use case around how we could do that. Other things pan out a little sooner.
One area that I thought could be of real use and more for your, as you're trying to process and assess claims, is maybe using AR and perhaps on-device machine learning. Maybe you would have different stuff based on if it's an agent out in the field or just the consumer, but to be able to, not just take a picture like it's a regular camera and send it across. That's one value. But now that, computers can read pictures in the way that they are able to, read traditional data, and then maybe better assess like right there and do machine learning on the device to assess what the claim ought to be, rather than just someone, using their personal experience to say, oh, that fender needs to be replaced or doesn't, or especially if you are putting the consumer in the place where they can submit some of the initial claim, on their mobile device. And I'm just wondering, if that's an area that you guys are looking at a little bit more closely.
We were one of the first groups to actually create a quick photo claim application. So if you have minor to moderate damage on your automobile, you can actually just use the Allstate app, open a claim, take a photograph of that. We actually have some patents around some of that software and enhancement that we do, and submit that as a claim without having to drive into a location to have an adjuster look at it. Now, if you're the kind of person who really doesn't like to use a phone, we'll send an adjuster out with a phone with our app on it, and they'll do it for you. But the idea is really to be able to get you back on the road and make you whole as quickly as possible. And by doing quick photo claim, it makes that process a whole lot easier for the consumer perspective and a whole lot faster and automated from our perspective. Now, AR, for example, let me give you a use case around that. Wouldn't it be nice if a company like Allstate had an application that happened to be called Digital Locker, and you were able to just kind of walk around your house and take either a video or a set of snapshots on your rooms, okay? And God forbid, your house burns down. It's not a complete burn down, but it's, major damage burning. We can actually overlay the way the room used to look to the way it currently looks, right? And do automatic, faster claim processing rather than having somebody either come out or you, in the worst case, try to fill out a list of things like, well, this room had a TV set and it had a desk in it and it also had, 2 couches and how many chairs and what do they look like and what do they cost, things like that. And was it wood flooring or carpet flooring, things like that. We could do a lot of that in a much more mechanized, automatic way.
Right. And you could use machine learning to actually identify the objects in the room as well, too. Right? So,
well, and then give you a replacement cost.
Right. And all that could be automated. So with that in mind, I'm thinking about, this is a bit of a selfish question, but I'm wondering how much insurance companies are starting to analyze social media data, because at Anexinet, one of our services is proactive social listening, and we'll analyze social media to determine how people feel about your brand and so forth. And I'm wondering if insurance companies are doing the same thing, but are, looking through social media for specific keywords, or even analyzing photography for, things like maybe prevalence of alcoholic beverages or unsafe behaviors. Let's say somebody takes a lot of pictures of themselves cliff diving, for instance. Is that kind of thing happening, and is that going to be happening more in the future?
Yeah, and Roman, if you cannot confirm or deny, that's an acceptable answer too. We will.
Right.
Yeah, there are innovative people doing lots of interesting things. Let me start with that. I will say that is certainly not a focus point for marketing teams in insurance today. They are doing exactly what you described, Steve, which is looking at social media to understand what their brand image is. So Allstate is spending a lot of time trying to figure out, how are we showing up to consumers? Are they angry with us? Are they happy with us? We have a lot of community programs that we participate in, either through our agents or through the corporation. We have the Allstate Foundation. So we're trying to generate consumer buzz on a positive note, right? That's what really a lot of interactive marketing effort is nowadays. It's around being able to look at that data, figure out who's using the Allstate name, how are they using it, positively or negatively, and then turn that into actionable insights that we can use later.
Oh, Steve, it sounds like you can breathe a huge sigh of relief at this point.
Well, yeah. Well, my last question was how far this kind of thing could go. Like, so we have these chickens that we're raising here, and for whatever reason, it's become a running gag for me to introduce some kind of chicken story that relates to the topic. And so today's chicken story is that we installed a webcam in the chicken coop so that we can check in on how these chickens are doing. Mostly, it's more so my daughter can have fun looking at her chickens. So my question is, and you've already touched upon this idea of giving discounts for burglar alarms and things like that. Do you think there will ever come a time when that may include burglar alarms that incorporate webcams, and then that might elevate to webcams being turned on all the time, and then analyzing the behavior of the people in the home? And that might not even involve a person at that point. It might be like some kind of AI or machine learning that's able to analyze behavior and then even adjust rates based on that kind of thing.
Oh, I definitely do, but I don't think it'll necessarily even be cameras per se. So let me give you an example of something I learned from the guys who do research for the Roomba vacuum cleaner. You know, the little robot that runs around the house cleaning your floor, right? That actually uses artificial intelligence to map out your layout, your house layout, and then come up with an optimal way to vacuum your home. Okay, but it knows based on kind of what it's bumping into and how large the bump is, if you will, whether it's a table or a sofa or a bed. And it's actually mapping out the room based on its best guess of what it's bumping into so that it can come up with these algorithms to run more efficiently. Okay. And you'll see a lot more of that, I think, before you see the intrusive webcam kind of behavior. Even today, when things aren't integrated, let me give you an example of, I think this is an unfortunate example. There was a woman in California, I believe, who was murdered. And she was wearing a Fitbit. And because she was wearing the Fitbit, the authorities were able to place the exact time of the murder and find out where cameras were in the area, not necessarily in her home, but in the area. And they found that somebody across the street had a camera watching their house that also saw the driveway of her home. And the father-in-law turns out to have been the only person, his car was in the driveway at the time of the murder. So, he's been charged. So you see those kinds of things starting to come together, even when they're not actually integrated together. Law enforcement is able to piece things together. So I guess what this means, Steve, is if you put a Fitbit on your chickens and somebody tries to steal or eat or kill your chickens, and you've got your webcam set up now, you'll be able to actually know when that happens.
Well, I've considered putting my Apple Watch on the chicken in order to get the walk points.
There you go.
Just to let it run around the yard all day. But, it's interesting because machine learning kind of provides a solution to the problem of privacy. If all this stuff, if behaviors and so forth on a webcam or audio, if all that can be analyzed by AI, is it as much of a privacy issue to be analyzing that data if nobody's actually looking at your webcam feed?
If you're in public. So, for example, in the UK, they do a lot of that. There's been a lot of work in the UK on analyzing behavior of people in subways and the way you turn your head, whether or not you're a wanted person or a person of interest for their perspective. They do a lot of surveillance in public. Now, naturally, there are techniques that are always available to do it, either because you're a spy or because you're a law enforcement agency or things like that, when you have a warrant.
Well, that's great. Glenn, any good wrap-up question?
Yeah, on the Roomba thing, we recently got one. And I'm not sure how good that machine learning is on that Roomba. I mean, it actually gives me comfort that, Skynet won't happen anytime soon based on how I see this thing going around our house.
It does take a while.
Okay.
It's got to get again, machine learning gets better the more data it has.
Sure.
That's one of the reasons I kind of question the Hancock or the vitality assertion that you're going to live 13 plus years longer. I just don't know that they have enough data to say that just yet. They might.
What I think is really interesting is this new field of like the motion dynamics that's coming about. Determining who's driving a car, determining how fast the car is going, what constitutes safe motion. And you see that all the way down to the new Apple Watch, where it now analyzes when you've fallen. So there's some algorithm was created to analyze those motion dynamics. And if you've fallen and then you're immobile for a minute, that's another algorithm. So I think that's a really fascinating area just on its own.
It is. And here's the fascinating area. In the past, those were truly, as you put it, algorithms that someone wrote. Now, what we're doing is we're not really writing those algorithms. We're letting machine learning create those algorithms for us. So you get enough data of Apple Watches falling, and then you feed that into a predictive model, and then it's actually occurred. So what's happening in artificial intelligence is kind of the same kinds of things that happened with computers years ago. Originally, computers were just meant to do calculations, right? Mostly on trajectories of missiles or cannons that were firing. Then what happened is we changed the use of computers and we changed problems into digital problems. And that's what we did with music, for example. We changed analog music into digital music. We changed a number of other things into digital problems that computers could solve. And I think what we're going to see now is people changing problems that we have into prediction problems. Can you predict that somebody's going to fall based on how they're staggering or, how high up on the ladder they are or how they're teetering? So by changing more and more things into prediction problems, that's where AI comes in.
That's great. And that will only accelerate the solutions.
Mm-hmm.
Just by leaving it up to the computers. That's awesome. Thank you so much, Roman, for hopping on. This was a great discussion. And thank you, Glenn, for joining us again.
Yeah, no problem. And I just want to add one thing at the end. Again, thanking Roman. Roman is also a member of the Emerging Technology Council, which I co-chair with Maribel Lopez from Lopez Research. So if you're listening and you like the kind of insights that you got on today's podcast, we try and have these types of conversations all the time around different technologies within the ETC. So I encourage you to go to emergingtechcouncil.com, click on the join button, and become a part of our community. So appreciate it, and talk to you soon.
Thank you for having me, guys.
Thanks.
Good luck.
And thank you for tuning into another episode of Device Squad, the podcast for the mobile enterprise from Propelics, an Anexinet company. Take care, everybody. That was great. Thank you so much, Roman. Really appreciate it.
Yeah, he hung up.
I can't believe he was with that company for 42 years.
I can't believe he's old enough to be at the company 42 years.
Really.
It's insane.
That's unbelievable.
I got to stop hitting the hang up button instead of the mute button. I got to learn this thing. I honestly, I don't think I think 1 in 3 conference calls that I get to, where I have to mute, unmute, I hang up on them.
That's great.
All right, cool.
Well, now we can all hang up.
Yeah.
All right.
Thanks again, Roman.
And I do appreciate the opportunity to do this. This is really great. Thanks, guys.
Thank you. That was terrific. Bye-bye.
Bye-bye.
Bye, guys.